Hey everybody, Courtney Smith here with our Wall Street winners for July 29th. Holy moly, past half the year, racking up big bucks. Awesome, awesome. Another good year for us. All right, so let's take a look at the market here. S&P broke to new highs on Wednesday, failed a little bit, then made it and stayed above the breakout level on Friday. This is good price action. But here's the real point. The real point is this is a crappy bull market. This is a market that's just trending slightly higher, not really going anywhere, not really doing anything, but it is a bull market. But we'll talk about seasonality in a second. Dow Jones, you can see here in the upper right-hand corner, the green line shows that buying pressure is declining. At the same time, selling pressure is going up a little bit. I mean, it's not a big deal. Buying pressure is still more important than selling pressure, but you see what I'm saying? It's a weakening situation. The NASDAQ did the same thing that the S&P did, and we did end up at new all-time highs on the high of the day, which is spectacular. All right, seasonality remains on a neutral signal. I have a feeling it's going to stay on a neutral signal until about October, which is really what it's supposed to do. It's supposed to be neutral throughout the summer. We're not supposed to be really climbing higher. So right now we need to get up above, let's call it like 160-ish. Now the purple predictor is suggesting that we can get up there, but so far price action, we haven't made those highs since really the beginning of May. So right now our seasonality indicator remains neutral. You can see here we're in the midst of a seasonally weak period. We should be drifting lower into the early part of, into the middle part, I should say, early to middle part of August, and then we'll start a bit of a mini rally. Not a big deal, but a nice little rally going into September. Then a bigger drop down into the middle of October, late October, and then you can see a very strong rally late in the year. So we're going to stick with that scenario. It looks like it makes sense to me. I don't see anything that's going to deviate from that. Now, the yield curve, we did poke above zero, okay, and then went right back down. So I don't even want to count. It is technically the fourth time we've gotten under zero, but the reality is that we've been under zero since May. All right, so we're now May, June, July. We basically have been below zero for 3 straight months. There's never been a situation where that happened, that we did not have a recession and a bear market. And by bear market, I mean at least a 20% decline. Now, it's a 1-year leading indicator. I'm looking for this now probably early next year. Definitely second quarter of next year. That seems very definite to me. Maybe first quarter of next year. But the point is we need to be always on the alert for a new bear market. We've got to play it from the long side because the indicators are still bullish. But we need to be aware and alert and prepared for any type of a significant bear move. Asset allocation moving slightly in favor of the stocks. Our risk indicator, it's in a very choppy upward movement, but you can see that we haven't, we've just been making a flat top since the beginning of July. I think we'll probably break to the upside here on our risk indicator, but nonetheless, it's choppy. All right, global shares are not performing. They've started to perform worse than the U.S. shares. So I think the key is to stay focused on the U.S. It may not be a great bull market, but at least it's a bull market, unlike the global shares. Bonds drifting lower. We really should be moving much more than this, but we're not. Purple predictor says maybe we'll move a little bit higher, but you can see that we're trading at the same price we were in late May. So really the market hasn't done much of anything for a couple of months now. Bond key factors, now they're starting to get all over the place. First of all, the gold line skyrocketing up, suggesting higher interest rates down the road. Then we look at the chart itself, the red and black line, and it's chop city, so it's kind of saying interest rates will stay the same. But the blue line, which is German interest rates, it's just plunging to new all-time lows. And that is the most important short-term factor affecting the bonds. So that would suggest we're going to see another leg down on the long end yields. Now, the dollar is getting very strong, and I'm getting more and more bulled up on the dollar. The simple reason is that although the Fed is going to be reducing interest rates in the U.S. and easing monetary policy in the U.S., they have about the tightest monetary policy of the major industrial countries, and much tighter than in Europe. So if the supply of dollars is tighter than the supply of euros, let's say, we should see the dollar move higher. And so I'm getting more and more bulled up on the dollar and more interested in actually trading the dollar on the long side. Now, long dollar tends to be bullish for the stock market. It kind of it's a long story. It's a complicated interreaction between the dollar and the stock market. But generally speaking, a strong dollar is good for the stock market. Now, gold, we broke the new highs a couple weeks ago. We talked about it. No follow through at all. I think with the easing by the Fed, we should continue to see strong gold. But it looks like the rally from May until the end of June was kind of the discounting of the first cuts by the Fed. Now we need to get some new fundamental information into the marketplace in order to get gold to start to move again. Our gold key indicators, though, now take a look at this price action, pretty sideways. But here you can see all three of our indicators are now going down. All three of them are down, yet the price is holding up pretty well. So I've been bullish for a couple of months here. I'm still bullish, but I don't like these indicators here. So I'm going to back off on that. I'm not going to be so aggressive on the long side in gold. I am long a couple of gold stocks. I'm going to leave it at that. They're continuing to move higher, so that's okay. All right, crude oil, we're consolidating down at these lower levels. I am starting to get a little bit bulled up, but it's not that great of a market right now. My philosophy is if it's not a great market, then stay out. And speaking of stay out, I think if you're not out of Bitcoin, you should be out of Bitcoin now. It's a bear market. We're making lower lows, lower highs. Purple predictors no longer bullish. I think that in general, what we have to do now is let this bull market run its course. I don't think we're going to get back down to the 4,000 level, but certainly no reason why we shouldn't get down to, I was going to say 7,000. But, maybe 8,000, 7 or 8,000. In other words, we're not looking for a big plunge-o-rama here. I'm just looking for a slow slide into the distant sunset over the near term. All right, everybody, that's what I got for you. Coming up this weekend, I'm actually already in Orlando, Florida right now. Coming up this weekend, we've got our Stock Financial Freedom System this weekend. The following weekend in Orlando, we've got our Option Success School. Now, both of these courses, we have scholarships available, so please go to support@wealthbuilderllc.com and check it out. See if you can get one of those, snag one of those free scholarships. Love to see you here. We've got Los Angeles, Las Vegas coming up, and of course our very, 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 very important masterclass for stocks in October. Option Success School, pretty much the same kind of thing. Also, master class in options coming up in October. You don't want to miss those. And because I do think we're going to have a bear market coming up, you really need to sign up for our bear market. A little short, quick thing. This is 7 option trading tactics. People are loving it. And it's only $7, so you should go get that as well. All right, that's it for you freebies. Fully paid up members. Hang on just 1 second.